I know nobody wants to hear about a 20K Bitcoin again, but there is a real possibility that it can happen. And at the end of the day, if you're aware of what is going on behind the scenes, then you can set a plan for it. And that is what I'm going to try and help you guys do in today's video. So we're going to take a macro look at Bitcoin and some other markets as well to have a look at why we should potentially not really be very bullish right now. I'm also going to show you the other side as well, though, and the conditions that might break our chances of a further move to the downside. So if you're wanting to hear both sides of the case, be sure to smash that like button nice and early because it does help to get these videos around the internet. Now, let's get into this video. So I'm starting on the weekly time frame. And the one thing that I want to point out for the bearish case is that Bitcoin at this point in time, on its recent move up from the start of the year, it's failed to get back to the support that was created in the last bull market. So we've not at this point in time managed to break back above around the 31,700 region. And when we look at the weekly time frame, since that point in time, we have started to cross back under all of the EMAs. So if I zoom into this region here, you can see the EMAs that I use on my charts are the 10, the 20, the 50, the 200, and the 800. And the 800 doesn't show on this chart, but all of those ones right there, currently price is under every single one of them and has retested them for 1, 2, 3, 4, 5, 6 weeks at this point in time, with wicks above, but failures to get full candles close above. That is relatively bearish. Mind you, it has not broken to new lows yet. So we can also see on the weekly chart that we have this vector candle right here that has not yet been fully recovered. Part of it has been, but not the whole lot. So this whole area right here on the weekly just immediately becomes your area of interest. And you can see, without me having to do anything other than draw a box on my chart, the bottom of that candle sits around 21,700. So that whole area becomes a target if we cannot get back above the weekly EMAs. Once we get through that, we then need to reassess what can happen next. And when we're looking at the weekly time frame, there isn't any other vector candles between that 21.7 to back at the very low lows that we've seen, what we believe or hope is to be the bottom of the bear market at this point in time, where Bitcoin retrace to the 15,500 kind of region. On the weekly time frame, we don't have any other vectors if we break below the 21,700, but we do have them on lower time frames. So we won't freak out too much about a revisit of 15.5 just yet, but we need to keep in mind what's happening here. So when we have a look, it's very, very simple. Support when it breaks, retest as resistance. Resistance when it breaks, it retests as support. It's very, very easy trading method. It doesn't take a genius to work it out. This here was the support in 2021, in June 2021, where we had the final move to the upside, and then the market structure changed and we broke it down. And now that support is trying to prove as resistance. At this point in time, it is acting as that resistance. So we need to see price break back above that level at very least in order for us to feel fairly safe. There is another thing that could potentially happen in this area right here when we're talking weekly time frame, which would actually prove the bearish case. And that would be if price does get a retracement up but create a lower high, it's going to create a head and shoulder pattern. So even if price does break back above the EMAs, we are not actually safe or bullish on a macro scale until we can get back above 31.7 and then retest it, because it is possible to break above, have a failed break, and then still come right back down. So if price can move to the upside here, we're looking to make sure that this part here does not create a lower high, because if it does, we have a head and shoulder, which is a bearish pattern. So now that we know where we are on the weekly time frame, we want to have a look at the daily time frame for Bitcoin, and I'm going to show you some key levels. Hold on, let me just refresh this. Some key levels on the daily time frame that we need to be aware of. And one thing that I want to make really really clear to you guys is my intention of this video is not to tell you we're going straight down to 20,700. There will be, on the way down, many opportunities to long on smaller time frames and many opportunities to short. And, you know, as long as you like understand how to trade and you can exploit those movements, you can still profit from it. But the point of this video is to say that if you are somebody who's wanting to invest for the long term, in this video, I'm going to show you some key levels that I personally have put in as limit orders for my spot buys for the future. And, you know, if they hit great. You know, it can happen at any time. It can happen in my sleep. When I see this kind of liquidity in the market, then I don't want to skip out on that for my long-term portfolio. And if they don't hit, it doesn't matter. You know, for example, if we came down and we didn't get quite into the 1 month liquidations at 21K, let's just say we only went to 21,500 and that was the lowest point we went, great, market structure would change. I would remove that order from the order books and I would just buy back in here. So it doesn't hurt to have limit orders if you have capital ready to deploy for the next bull market that you're not going to need for another 2 years. So before we get to that very, very low target, let's talk about what's in between, because on the daily time frame, we have this situation here where we have this green vector that is currently sitting between 25,120 and 25,800, let's say 50. And that price has not come right back into the body of that candle yet. So that is our immediate area of interest for now, is to see if price does come back in there, because there are two key liquidation levels that are also within that zone at 25,249 and 25,775. So the first thing that we want to watch for, if we want to have, you know, some sort of thought that for now we're not going further down, is we want to see if price does get back into that zone, create a higher low, then we would believe that that's all it's going to do for now. And, you know, we may have a push to the upside. However, if price gets back into that zone and does not give us a strong bounce out of it, that's when we need to start looking towards the lower levels, which again could be your areas to spot buy for the long term. If you're a dollar cost average kind of person on Bitcoin, this is a really good way to deploy that extra capital. I personally have a weekly dollar cost average system where I don't even care about the price. It's not a simple matter of buying, you know, the same amount every week. I call it a supercharged strategy, and I cover it in my investment courses, but it does allow me to get, you know, more than a 70% extra return on what a simple dollar cost average strategy gives you. And so, but these liquidation levels are areas where I would deploy extra capital, and that extra capital comes from what I call a reserve that we make in the bull market. Anyway, long strategy, point being, I have money set aside that has come from profits and not from me having to put in savings or, you know, money from income or anything like that. So, these are the levels where where I would put it. Now, we have some pretty high levels of liquidity before we get to that 20,700 region. And I'm going to show you that on HyblockCapital. So on HyblockCapital, I'm looking at the 1 month look back period. I don't really like to go too far back because this doesn't get wiped unless price hits that area. So 1 month gives me a good idea of what is in the, you know, what liquidity is in the market currently. And we can see here when I scroll over these lightest areas, 24,800 is one. So I always front run these areas. So if I was to put in a spot buy and I was trying to average down until, you know, potentially that 20K region, my spot buy would be at 24,900. And sometimes it would be $150 difference because sometimes I've missed out on just doing it at $100. But that would be one. And then we can see that there's this green area through here as well. And that kind of sits between about 23.3 to 23.6. Let me actually zoom in on this area so that we can see it really clearly. So yeah, I'm looking at this area here. So it's not all that great right now. I do like to see it really, you know, bright yellow like this one that's up here. But it may grow over time. So that's why at this point in time, it's an area of interest for me to look at. And then further down here, we can see that the next lightest green area potentially going to move into the yellow is at 20,700. And look, that's a range as well. It's up to about 21K. So, dollar cost averaging, having just some spot buys at those areas, as long as you have a long-term plan. If you need price to hit that and make money in a month, don't do it, because it may not, but if you can put money into the market that you're not going to need for 2 years, then these are good areas to choose to help average down and get yourself a really good averaged entry for Bitcoin for the next bull market. But below that 20,007, we don't really have anything at this point in time. And this reminds me of what happened back here. Let me show you on the daily. This reminds me of what happened back here when Bitcoin hit the 15,500 region. We had back at this period of time, there was a very bright yellow that looked like this bright yellow up here. It sat on the high block for months, and it became an area of interest because it sat there, it grew in size, it didn't move. And whilst everybody was looking at Bitcoin thinking that, the lowest of the lows was in, we weren't going to break 20K. We've never broken below the previous years or the previous cycle's all-time high before. That level was sitting there and was a concern to me, and was something that I thought was going to be the bottom of the bear market. For that reason, within my investing community in Trade Travel Chill, we had dollar cost average buy orders all the way down. We had them from, I think it was 18K all the way down to 15,000 because of what we saw on high block. It was a super high, bright yellow area. And as you can see here, that's exactly what price did. The actual number was 15,600 and we spiked into 15,005. Now, how close to the bottom is that for a buy, So it's proven to us. It also helped, to pick the top as well when we got out 4 days before the bull market actually ended. So this sort of data is a game changer. And I know, like I said, I know nobody wants to hear about a potential 20K Bitcoin, but if it does happen, the data is there to show you that it has a high possibility of happening. And instead of being emotional about that, I did see some comments earlier on saying 20K would wreck me. Well, it doesn't have to, because if you know that that's a possibility now, plan for it. I don't know what you mean by that comment, 20K would wreck me, but you could easily use a short position as a hedge for whatever spot buys you have right now that are in the red or are close to going in the red. Every spike high that cannot get above macro level EMAs should be where you short. And you can short assets. I'm probably getting a little bit too detailed in this video. It's a habit. I apologize. But you can short assets on low leverage that you have spot bought that are in the red, so that you can profit from the short when the bottom finally is in and you have the market structure change. You take your profit on that short, you put it back into the asset that you've bought, and you bring down your average entry. That might take a whole other video, but I hope that made sense to some people. You don't have to get wrecked. You don't have to. If you know this ahead of time, you can plan for it. So know that on a macro level, we are below all EMAs. I'm going to show you hope at the end of this video, so be sure to stay with me. But my goal here is to initially get you to plan for the worst. Then I'm going to show you how we can hope for the best. So moving on from that, we have this situation, same situation on the daily. Now the 800 EMA has shown up. It's the dark purple one on my chart. And we actually do have the 10 and 20 bearish cross currently. What we would need next is, if we were going to have further downside, we need to see these higher level EMAs start to cross below as well. So the 50 will cross below next. It's already crossed below the 200. So that's what we're kind of watching for on this. So if price does not bounce out of this area of interest that I showed you, then, it could mean that we're going to break down. The next level of liquidity is the 24.8 that I showed you. Then the 23.6 is a really high level as well. And then finally, we're coming down into this 20.7 to 21K region. When we zoom out on the daily time frame, again, what our goal is, we don't just go flat by the numbers. We're looking for those areas of liquidity to line up with vector candles. So these ones here, if they were to break, they actually don't line up with any vector candles. So, you know, if we did spike down into here, we'd have to see what it looked like at the time. But I would expect that if we get down into here, we're likely going to go down a little bit further. This one here lines up with this green vector right here. Let me just zoom in on it so you can see it clearly. So this is the candle that I'm talking about here. And so we have that 3-month liquidation, you know, a little bit towards the top of that candle. That would be best case scenario for me. Like if Bitcoin gave us a really nice strong bounce at 23.6, then I would probably say that, yeah, I feel like the bottom's in and we're going to be fine. But if it bounced and gave us yet another lower high, then that's when my belief changes that we are coming down into the I want to be clear that it's not exactly 20,007. It's somewhere between 20.7 to 21K, but 20.7 is the biggest area of interest there. And that doesn't line up with a vector on the daily, but it does line up with a vector on lower time frames. So now let's go to the 4 hour. So I can show you, because one thing that I teach in my community is that trends happen in 3 phases, right? So we have macro, intermediate, and micro. So the macro trend that's the overall trend that's happening on higher time frames, you know, daily, weekly, monthly. Then we have intermediate, which to me, it's like anything under the daily, like the 12-hour, 8-hour, down to about the 4-hour. Then we have micro, which is the 1 hour. So you can be bullish on a micro time frame, but you can be the opposite on a higher time frame. But when you have confluence on all, that's when you're going to have better trades, because on all of those periods, like we're trading the same direction, and you'll have more profits, but you'll probably also have like better risk to rewards, and it'll just be a period in time. Most people don't look into it, but they'll go, oh, like I'm just winning right now, my strategy is amazing. They don't realize that it's because all 3 phases are lining up right now, and that's what we're looking for. So in this video, I've proven to you that on a macro scale, we're currently under all EMAs, which is technically bearish. On a micro scale intermediate scale is where we are right now. So let's talk about the intermediate scale. And what I want to point out to you on the 4-hour time frame for Bitcoin right now is, again, this does look potentially scary, because we do have this head and shoulder pattern after this little uptrend here. And when we look at the neckline of that head and shoulder, we have actually broken and retested it already. So again, we need to be preparing, and we're under all EMAs. Now, what would change this? What would change this is if we create an ascending triangle from here right now, and price stays in that zone and then ends up breaking through. And that means we have a failed neckline break and we're okay for now. But the only positive I see in this at this point in time is that we haven't, after this retest, at this point in time, we have not created a lower low from the break. So keep an eye on that. You're watching to see if the 4-hour candles can get back above the EMAs. But if they can't, then, you know, again, we're looking at these liquidation levels down here. Now, look how they also perfectly line up with our blue vector right here. So this would be your 4-hour target at this point in time, which is 25,100 to 25,940. Anywhere in that range would be your target, and it could give us that higher time frame bounce as well. So if this does break to the downside, if we get a bounce out of here, we're going to be okay for now. But any bounce, you need to be zooming out to a higher time frame and check if that bounce creates a higher time frame higher low, because if it does, we're still macro bearish. Until we get a higher time frame higher high, we should still remain macro bearish. And I would keep those dollar cost average orders in, and I would also act as targets for your short position. So 4 hours not currently looking great. However, it is also just sideways, and it's hanging on by a thread at this point in time. When we go down to the 1 hour, there's not really much more for me to add on the 1 hour. I'm going to skip the lower time frames because they're not all that important for this video. What I will say is, if you happen to find any W formations on a 1 hour or a 15-minute, just try not to hold on to them for too long. And if you happen to get your 3-level rises out of them, zoom out immediately. As soon as that 3rd level is in, zoom out. Did it create a lower high on a higher time frame? You're still bearish. Take that profit and bag flip it into a short if your conditions are met. Now, I also want to show you, just have a look at the general market. If we have a look at the S&P here, again, we can see, at the end of the day, if the market in general is bearish, then Bitcoin's going to have to do something fundamentally amazing, like an approval of an ETF or, something like that, for it to break away. And those things, they're just not, they're not close enough right now for that to happen. So when we have a look at the S&P, we had this V bottom here. We've had our rises through here into this area of interest here where we rejected. And look what's happened now on the S&P is we have a M formation, right? It's starting to drop the EMAs. So if the S&P is looking bearish, we have to take that into consideration. What would we be waiting for next on the S&P? This, by the way, is the daily time frame. So it's macro, not great. So we would be looking now for a retest of that 50 EMA. Let me just get this pencil tool and show you. So if the EMAs came and did something like this, and the 200 crossed to the top, that's now bearish. And if we got that lower high, that's coming down for another drop, potentially to the 800 EMA. Crypto is going to be affected if that happens. What would invalidate that? Break back above the EMAs. It's really as simple as that. When we have a look at NASDAQ, a lot of people say Bitcoin, is very similar to NASDAQ. I'm going to show you something else in a second. Same thing, could not get back into its area of interest, which was a previous vector candle, right? Could not get back there. Now look what happened. It created the M formation, and now it's broken this trend right here, and it's starting to drop under the EMAs. So you're looking for exactly the same thing on a macro scale. Will it come back for a retrace, create a lower high? Look, we've got an area of interest now here because we have this red vector candle that was created. So if the NASDAQ now was to come back up and reject in that zone, we would expect further downside to the 200 EMA. If it got bad, to the 800 EMA. So unless it changes structure from here, they're not looking great. Now let's have a look at the 𝗥𝗍. The 𝗥𝗍 is like on fire. Look at this. It's just straight up. We had these key levels here that it's broken at this point in time. It may come back to retest them, but it may just keep going. But the 𝗥𝗍's area of interest is this vector candle right here at 107.36 to 110. So we're looking to see if the 𝗥𝗍 can get back into that zone and not reject. It's not great for anything else, right? So this is what we're watching for. Now that it's broken a key level, can the 𝗥𝗍 get back into this zone? If it does, what happens there? And finally, I want to show you the Dow Jones, because Dow Jones very rarely gets talked about. However, Dow Jones and Bitcoin's price action are almost identical. The only difference is the time in which the peaks are formed is not exactly the same. But I'm going to show you that in a minute. First, just let's have a look at this basic trend line on the Dow Jones. It has now broken and we've dropped below EMAs. We're just dropping the 200 EMA now. At some point in time, it will come for that retest. So again, we've got a drop of the trend line. We're looking for the retest to create the lower high. And if it does, if we get that lower high and we don't change the structure, it's not looking great. Now, let me show you this comparison that I just showed you. These two almost look identical, right? You've got the bottom here. This was the COVID low. You've got these two levels here and here. What are they called? The peaks, the peaks of the last cycle. And then we've got the lower high here, lower high here. The thing is that one follows the other usually, but they're not at the exact same period of time. So COVID happened obviously around the same time because that was a new news event, a big, catastrophic news event that everything got affected by. But then since then we went into a bull run, and this peak here was formed on Bitcoin first, then the Dow Jones followed. Then when we had this low that happened here, Bitcoin found its low first and the Dow Jones eventually followed. It found its support down here, but it was a while later. When Bitcoin came up for its second peak, it hit the second peak, then the Dow Jones eventually followed. Again, we have this lower high here, and eventually the Dow Jones followed. But when we have a look at this, like what's happening now is that we've got this peak here. Again, Bitcoin hit the peak first. And then, oh, no, sorry, actually, in this case, Dow Jones hit the peak first. And so it could be that we have now a change in timing, but essentially the pattern looks very, very similar and nobody ever really talks about it. Now on the Dow Jones trend that was forming here, like I said to you, it's just broken. But if you draw the exact same trend on Bitcoin, Bitcoin has already broken and retested. So nothing here on a macro level is currently looking bullish. And so that just means just have a plan in place for worst case scenario so that you don't have to be a person in the chat saying, if it goes there, I'm wrecked. You don't have to be wrecked. You just have to set a plan. Before I give you the best case scenario, let's have a look at what's going on the heat maps, because currently we have buy orders at 26,000, right? So that's going to help with that idea of us just, getting that short-term retest where if we do get a strong bounce out of there, I'm going to be honest, 1K is not enough for a strong bounce. But if we do get a strong bounce out of there, we may have some short-term upside. The short-term upside should be used as your opportunity to open short positions if you get lower highs on a macro time frame. But I'm going to show you the heat maps and what's going on spot, because at the end of the day, if we're going to have a bottom put in, and what we need to see is buyers step in, people who want to invest in Bitcoin, where are they wanting to actually buy? We're not looking at futures traders, because futures traders are just trying to exploit price. Whether it goes up or down, we don't care. I'm a futures trader. We don't care. I don't care about the direction of price. I've noticed you guys in the comments say like she just has no bias. I don't ever. It's just what is the chart showing me, and I try to exploit that and make money, whether it's up or down. The price of Bitcoin is irrelevant to me. But when I turn into the investor mode, then the question is, where would I want to step in to buy this? And where are other people willing to step in to buy this? Because they don't short for spot, right? They buy, they hold, and they wait. So they have to believe that there is a good opportunity to buy. So where is that? We can see that also on heat maps when we have a look at the spot heat map, which is what I'm on right now. So when we zoom out on this, we can see that the high levels currently are sitting at 25,000. Now, that's not super high. Just to be clear, it is red, but it's not super high. I would want to see higher than 369, but it's an area. So that could be an area that acts as a temporary support if we were to break down there. Again, what would you do if we were to get a bounce out of the 25K? If we did come down there, then you would be looking for the higher time frame, lower high, to open a short position, or to see if the structure changes on a macro level. Moving down further, we don't really have anything all that significant until we're simply just looking for red zones. Now, look, we come here. So this is sitting at 20,000. So, that's more decent. 453 is more decent than anything else. That's where buyers are willing to step in. What if we were to get a higher low from where we are now, and just move out, and everybody was to believe that the bull market's back, we would see orders like that closer to the current price. But we're not seeing them till around 20K, and we just have to face the fact that that's what's going on right now. So on a spot chart, we're not seeing them till around 20K. So that should be your hint to short rises at the moment. Until they change that structure on a macro level, you should be shorting the rises, and you should exploit the rises on smaller time frames. So 15-minute, 1 hour, if you are a futures trader, that's where you want to be taking those long positions. But at level 3, you have to zoom out and reassess and decide whether that's the area to bag flip. Now, one other thing, should I get into Ethereum first or Bitcoin upside? Let me know in the comments. Do you want me to give you some hope on Bitcoin first, or do you want me to cover Ethereum first? Next short target, 25K, says Rick. Who cares as long as the price moves? Exactly, says DIY Capital. People will cry when price goes down. Yeah, probably. Probably ETH. Okay. All right. Let's talk about ETH. So I have spoken about this. I won't spend a lot of time on this, but I have spoken about ETH on a macro level. Look at this. This was the M formation from the bull market. We know price drops in threes. We've had our drop level 1 on Ethereum on a higher time frame. This would also, I'm on the daily, but this would also be relevant on the weekly. We had the retrace, we've had the drop. Ever since then, we've just been creeping here in a ascending triangle, but that could be this period of time, the consolidation period before the final drop. What we have to watch out for on Ethereum is whether or not it actually breaks this channel, which at this point in time, it has not, but it also has not had a strong bounce out of it. So we do have liquidation levels below the current price for Ethereum. If we hit them, new ones may open. So I'm not saying that those would be the bottom right now. We would need to see what happens if price actually does hit them. They're currently sitting at 1480 and then 1312. Is it possible that price comes down lower than that? Yes, it is, because at this point in time, because we don't have the liquidation levels, we only have vectors to go off. There is this one here that sits at 1,000 to 1,100 ETH again. So it is possible to see that. It would probably be fairly dramatic, but it is possible. But until we break this channel here, it's not really a discussion yet. But I still would prepare for it, because look what's happening to the price within this zone. And we can see here, this is what we call a stopping volume candle, right? Where it's a high volume, but it's a small body and a large wick that dips into a previous vector candle. So this one qualified here, but what you need to see after that is the follow through. So a candle like that would usually create a W formation, which is bullish, right? But you have to see the follow through. So this gave a second side of a W, which was looking positive, but we've not yet broken the 50 EMA. So what would happen after a candle like that is you would get a high volume break of the 50 EMA. And so when we look at this here, and the 50 EMA, by the way, is the blue EMA on my chart. So this one right here, instead of getting that high volume break, we got a rejection. So it's really not looking all that positive. But if I really wanted to, like, I don't know, give some hope, we have created a higher high as well at this point in time. But there's just no volume here. There's no interest. And that's kind of another point here, is like, nobody cares about crypto right now. So why would people really be buying at this level? You know, I've shown you that spot buyers believe we're going down lower. And that's probably why we have no liquidity right now, is everybody's just waiting, you know. But we need to see some volume step in on ETH. And if it doesn't, look, we're below every EMA on a daily time frame. I've kind of banged on about that enough on this video, that if we're below every EMA on a higher time frame, we are bearish until price can break back above those EMAs and bring in the volume to do so. Just to break above is not enough. It needs to bring in the volume on that break. So there is a little bit of hope with ETH. We also really should prepare for more downside, because what we would expect out of a W has not happened at this point in time. And if it does, you know, you could be lucky. You could end up buying some cheap ETH. Now, finally, Ludwig says, we've got a perma bear in the house. No, we don't. You have a realist in the house. That's it. Like, I'm actually never bearish or bullish. I just trade what I see. If you've probably watched a few more of my videos, you would know that. Now, let's talk about the best case scenario for Bitcoin. So I did tell you I was going to leave you with some hope. It may not all be bad. Let's go back to the weekly. The one thing that we have to hang on if we want to be bullish on crypto right now is that even though we have failed to break this support at the 31.7, and we're currently just dancing around the EMAs, we also have held this resistance here, right? So we broke through the resistance, we've come back to retest it, and at this point in time, we have held it. So the bad news about that is that we're essentially just in a weekly time frame channel, which is annoying, and it can take many, many, many weeks before it actually breaks out of it. But best case scenario, this support here holds, which is at 24,550 kind of area. And if that does hold, then, we do have some hope. But again, we'd have to make sure that it doesn't come up to create the lower high, because that's going to give us the head and shoulders. That would be bad. But if it held and we get a volume break to the upside, we're looking for market structure change. And that's when we would know that for the moment we are out of the clear. So that's all I have for you today. I hope that you guys found this video interesting. Again, stop thinking that it's a bad thing if a price breaks down. Just create a plan for either way instead. I'll see you guys on the next video.